Good day all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Monday, and we're at the 19th of August 2019, just after 5:15 p.m. Central Daylight Time. Be aware of a Tuesday reversal. You had a strong Monday up in the stock market off of what I'm going to call noise of the president. He sent his A-team out again, Robert Navarro, Larry Kudlow on morning television yesterday, talking about the trade and this and that. And, you know, they're having teleconferences with China. They could have teleconferences to the blue in the face. I don't see anybody giving up anything. We still want what we wanted all the way along. They don't want to give it. I don't see how you're making any progress. And both economies are sort of slowing down. Now this week you do have taking place in the financial markets the Jackson Hole Conference in Jackson Hole, Wyoming, which is the central bankers getting together. That is important, and you want to keep up with it because you often get a clue as to where the central bankers are headed. I happen to think it's more easing right across the board. I don't see anything not getting easier. And the race is on to zero rates around the world. I think it was, is it Denmark, that's offering you, if you buy a home, interest-free mortgage. And in some cases, if it goes negative, you'll be paid to take on that loan. I mean, it's insane what you think about that. It exists. It is not a fluke. It exists. Google it. You'll see that I'm right. I think I've got my country right, but it's really crazy what's going on. So this race to the bottom is there. Everybody's fearful of the next recession. So when you get a little bit of talk, the stock market jumps, but it's summer. We're August 19th. Your A-League traders are not here. They are on vacation. The streets of Chicago are filled with tourists. These people are coming from somewhere. And I'm not saying they're all traders, but understand the mentality in Europe and here. So as we take a look at the weekly chart of closes, you're in a bit of a correction in the stock indices. You've come down from this 3024 area. You're back down off of that to 2920 tonight. That's a 100-point break. When you take a look at the daily bar chart, you see the swings that the market has had, and you've left this high area for an area that had a big bottom, and then it got a bounce. Now, I don't want to say a bottom, a big break, and then it got a bounce. I had the wrong word there. When I look at what we've got, we have a pattern of lower highs. Do you see them with the two arrows? But at the same time, I can argue you have higher lows. That's not a trend. So yes, the legacy is still a bit bearish, but I think the market is just sort of caught right here in this 2940 zone where you've been sort of running into resistance all the way through. Take a look at key moving averages. You didn't have enough zip to get down to the 200-day average. You certainly got close to it. You got as low as, what, 2817, and that number's 2809. Now we came back to the combination of the 100-day average and the 18, and I would expect the market's going to have a bit of a problem here. As I said, I don't see a trend yet. You could set the market off by getting over this zone and closing over let's say the 2950 area. That'll probably get everybody's attention. But barring that, you're just sort of in a bounce area. When I look at Bollinger Bands, you didn't quite make it to the lower band. You didn't make it to the 200-day average. It's moving averages that are in play and momentum. And the momentum of the market is this. You've got momentum up, the bias down because you're under the 18-week average, and I don't see a trend in the swing line. When I look at the NASDAQ, I can make the same argument here. I can argue that you had the lower highs and the higher lows. This takes a little bit more looking at, and you have to be of a more bullish bias here. You've got the higher lows and you've over the 18-day average. So on the pullbacks, if the market wants to stay in a tight area, the 100-day average and the 18 should be offering some support. Am I excited about the market? I wish I could say I was. I'm truly not. When I look at the Dow, lower highs, higher lows. Bothered right away. 200-day average, at least it was hit again, and it's done its job. It has stopped the declines in relatively brief periods of price action. Now I see resistance pretty solid at the 100-day average in the red line, the 18. The green is the 100. So that's the resistance point, momentum pointing to the upside. In the Russell, I see a market that's trying to climb back into resistance at the 18 and 200-day average. And I'm wondering here what kind of pattern. It could be lower highs and higher lows as well. In the VIX, you're back to the 18-day average. Remember what I said? I realize they can run the bears out when they write these calls. And writing a call is always at these levels. I'm using the wrong word, always. Writing a call is generally much riskier than writing a put when you're down at the number 10 or 12. You can only go to 0 in theory. But when you write a call at, let's say, 14, 15, it can run into the 20s very easily. It's been doing that. There's the pressure. That game is over, though. Now the pros are back to neutral, and we have to wait and see what's going to happen. You closed under the 18-day average, so your bias is down. You have the support at the 100-day average coming in at 1529, and you got a higher high and low pattern. Don't know what to do with it. In the bonds, still a bullish pattern. There's a but, though. You're starting to roll over in momentum here, so I'd be very cautious. You know we've got central banker talk with the Jackson Hole, Wyoming symposium going on, and this could set up a bit more of a correction in the market. The market today was under a bit of pressure because the U.S. Treasury was saying that they were again exploring going out for 50 and 100-year T-bonds. Why not? I mean, the whole idea of issuing debt when it's low is take advantage of it. Come on. I could see them rolling out of some other debt that they have that's higher paying and going to longer-term debt like that. Why not? In the 10-year note, higher lows, higher highs, still an uptrend. Momentum waning, but hasn't turned down. As long as the red line doesn't close under 80, I'm friendly this market. But in order to get down to the 18-day average of close at 129.14, which is a full point away, you will lose that number. So it's a bit dangerous right here as I thought it looked in the bonds. TLT, I'm also watching to see, does it lose its embedded reading? So in the interest rate, suddenly the horns in my head are up, the hair on the back is bristling, and I'm wondering, is something of a correction going to come here? Did we get a bit too far too fast? That does not mean I don't think interest rates are under pressure. I think they're going to stay under pressure, in other words, to the downside, but you always get corrections in markets. In the dollar index, we came out of this sideways action. Maybe we get to the upper Bollinger Band, but I'd look for pretty stiff resistance at that point because in the past that's what it's done. As we keep looking, when it hits that upper Bollinger Band, it seems to run out of momentum. I don't see that changing this time around. And in the eurocurrency, it's the lower Bollinger Band in an oversold condition I'd be concerned with. Like the dollar, it's not a trend. You got a higher high and low, and in the dollar, you got a lower low and a higher high. As we come over to the British pound, once it gets to the 18-day average, I think it is used the buying power it's had up, and I wouldn't be surprised to see the market drop again. Why do I say drop? Because as long as you still have the lower highs, the lower low overall, that's just a resistance point. You lost an embedded reading, getting up to it, and that's what you've basically done, is all that was called for if it was really a good technical play, which it turned out to be, and now the market should resume wherever the trend was, and I think it was down. In the yen, we're trying to correct back, as you notice, to the 18-day average of closes. You're working off an overbought condition that rallied sharply when we had that last round where the stock market fell. People didn't understand what was going on. It's August. I'm going to repeat it over and over. In Bitcoin, have we run the gamut to the downside? That's the question. You've got the pattern here of lower highs. Now you're getting a bounce off this low, and you're just neutral as I'm seeing the market. In Oct Brent versus October WTI, look at the differential, $3.64. And you've got a rally in a phase that went up the last week, fell back to a lower low. Now you're just sort of bouncing. This market is void of a trend. It has bias to the downside, but it is not trending down. I'm going to argue that WTI crude is actually in an uptrend. Higher lows, higher highs. Momentum is up, bias is up. I'm looking for support around the 55.25 area. You break this uptrend if you take out 53.77, and there's very formidable resistance all the way up at 58.67 to 58.93. In gasoline, you have the pattern of a lower low and a higher high. You have an oversold condition where you're just drifting, again, a trendless market. And in the nat gas, don't be surprised to pull back to this 18-day average of closes at some point here and regroup. You've been in an uptrend with higher lows, higher highs. It all began really back over here. And once you closed over that 18-day average, you put into play the possibility of an upper Bollinger Band move. Now on pullbacks, the 18-day average should be where the life of the market starts figuring out what next. We write about this and a lot more in our Linn Associate research, and we cover the whole gamut of commodities. If you haven't seen our free offerings and our new look of our website, you should do so at www.iraepstein.com. We highlight the videos that we do. We highlight the research, the products that we have. During the day, we offer a lot, and in the evening, we offer it. Our crews, a lot of crews go home. They don't start publishing again for the evening. They're gone at 4 in the afternoon. It's not how we work. So we put out new stories. They'll go until tonight, early evening, then they're going to resume. And I say first thing in the morning. I'm talking 5:30 in the morning. We're already all over the markets with our news and all that's going on. So if you'd like to see what we do, because we're a commodity broker for commodity people, all you need to do is go to our website. You'll see the offerings right there. You go to the front page, it'll tell you where to click, and you see them. And we've given you a new way to sign up that's easier. And you can also click here to get to our front page if you're watching me on YouTube. I'm Ira Epstein. You have a great day, and I'll see you in the morning. Take care now.